We got the Fed meeting this week on Wednesday. They're going to come out with their policy statement. Most likely they're going to cut 25 basis points with an off chance of doing 50 basis points. It's not really about the cut. It's what they say during the press conference afterwards. Now, 3 weeks ago, they met in Jackson Hole. Powell all but said that they were going to end up cutting rates and that they're open to it. The market's already taken that into consideration. Now, here's what happens. When the Fed cuts, they cut a short-term rate, not a long-term rate. Mortgages are a long-term rate. So sometimes when they cut, rates actually go up slightly afterwards. Now, I think everything's baked into the rate sheet because the Fed telegraphed this a couple of weeks ago. Now, here's what happens, though. People will hear, oh, the Fed cuts rates, and then they'll be in tune with where rates are, which are at the lowest level since February of 2023, and then rush out to go get refis. You're going to see in 2 or 3 weeks, the banks are going to be like a little backlogged because they don't have the manpower to process a ton of loans because they laid off a bunch of people over the last couple of years. And then the only way that banks could actually slow down their production is they raise their rates. So they increase their margins because they're super busy. Get ahead of that curve. Get your refi in. If you're sitting in a 7 or 8% interest rate, now's the time. You can get something in the low 6s, possibly with a 5 in front of it. But now's the time. Don't wait 2 or 3 weeks when everyone's doing it, because trust me, banks will raise rates if they get busy.